This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, December 18th, 2014. Euro dollar. So the 50-day moving average continues to be a formidable resistance point for the euro, with the indicator capping gains over the past several months and once again capping gains this week after the market tried to poke above earlier on Tuesday. The latest break below recent lows that we had seen from the week has opened the door for a retest of the recent 2014 base at 122.47, 122.48. A break below 122.48 will then open the next measured move objective, or the next downside objective, which comes in by the 2012 base at 120.40. Sterling dollar. So cable continues to consolidate just off its recent 2014 low. The market tried to match that low on late Wednesday, but we're still waiting for a break below this 155.41 low. A break below would open the door for a fresh downside extension towards a measured move objective in the 152.50 area, while only back above 158.26 would compromise the short-term bearish outlook. Dollar yen. Dollar yen remains locked with an intense uptrend, but the market has been correcting over the past several sessions after breaking to fresh 7-year highs at 121.85. The break back below the 10-day moving average has opened a move and a correction all the way to the 115.50 area, which coincides with a 38.2 fib retracement off of the October to December low-high move. From here, it will be interesting to see how things play out. A break and close back above the 10-day moving average would expose a retest of the 121.85 and 7-year high and the high that we saw on the 8th of December, and expose even further gains beyond there, while inability to clear the 10-day moving average will open the door for a downside or renewed downside and the extension of this correction potentially below 1550 and towards the 112 area. Ultimately, however, the structure continues to be highly constructive, with dips seen as formidable buying opportunities. Euro Swiss. Euro Swiss has been an interesting market on Thursday, with the price surging beyond that key resistance point at 120.45. The 124.45 level represents a previous support from September, and a break back above this level now suggests the possibility, or opens the door for the possibility, of a key base in place, which would then expose 121.40 further up. But we need to see where Euro Swiss closes on Thursday. A close above 120.45 will encourage the basing prospect, while inability to close above 120.45 will still keep the pressure on the downside. Aussie dollar. So Aussie dollar has continued to extend declines, with the market trading all the way down to a 2014 low and a multi-year low of 81.06, 81.05 in Wednesday trade. The market has since been bouncing a little bit, and it's only natural to see such a correction given the oversold technical studies. But key support is just below it by the psychological barrier at 80, and a test of this level is expected in the days ahead. Look for any rallies to be classified as corrective and should be very well capped, ultimately ahead of the 85.41 previous 2014 low. Dollar CAD. Dollar CAD is in the process of consolidating recent gains by yearly highs and fresh 5-year highs, with the market poised on an upside extension towards a measured move objective at 117.50 in the sessions ahead. Any setback should now be well supported by the previous 2014 high, which now acts as support at 14.67, while only back below 13.13 would compromise or delay the current short-term bullish outlook. Kiwi dollar. Kiwi continues to be locked within a consolidation, although the market did recently break to a fresh 2014 low at 76.09. This does put the pressure on the downside, and given the overall bearish outlook over the past several months, the downside is expected to be broken at 76.09 in favor of a fresh downside extension and measured move objective towards 72.85. Ultimately, only back above 80.35 would compromise the bearish outlook, with any gains really seen very well capped by the 20-day moving average on a close basis. SPX 500. So the S&P 500 has had a nice correction over the past several sessions, with the market trading all the way down to 1968 ahead of the latest rebound. The trend continues to be overly bullish or highly constructive, and this latest setback coincides with the top of the daily Ichimoku cloud, which is a formidable resistance point, support zone over the short term. The market could be poised for a bullish continuation at current levels. However, a break back below the recent low that we saw at 1968 would suggest a more significant top is in place and would expose the 200-day moving average at 1950 further down. At this point, though, the market continues to trade within a bullish structure, and only back below 1968 would warrant a shift in the outlook. Gold. Gold has done a nice job of recovering since November off the 1131 multi-year base, and the market is now looking to potentially put in a higher low ahead of the next upside extension towards critical resistance at 1256. A break above 1256 would force a shift in the structure and open the door for a more constructive outlook, while inability to take out 1256 will keep the medium-term pressure on the downside. That's all for today.